State pension to be taxed. Hello, I'm the Grumpy Gammon, and these are some of my motley musings. The easy read summary of the Labour Party's manifesto said the following, quotes, "We will not make working people pay more tax like national insurance," unquote. As we've learned, we have to pay close attention to the words used by the government as what they mean by those words, that is, if they've actually decided what they do mean, and an ordinary person's interpretation of them can be at variance. Pensioners are not working people. Given the government's attitude towards pensioners, it would be prudent to assume that even if honoured, that particular manifesto commitment will not apply to pensioners. They also said, quotes, "We will give older people enough extra money every year for their government pension," unquote. On page 79 of the large print version of their manifesto, the Labour Party said, unquote, "Labour will retain the triple lock for the state pension," unquote. When questioned about this, Sir Keir Starmer said that the triple lock will be maintained for the time being, or words to that effect, implying that it's not guaranteed for the duration of the current Parliament. I'm not counting on that commitment being honoured beyond 2025-2026. The Conservatives, you will recall, froze the personal income tax allowance until 2027. Despite criticising this in her response to last year's budget, Rachel Reeves proposes freezing it beyond that date, probably until the end of this Parliament in 2029. That will increase taxes on working people by what economists call fiscal drag. As incomes rise, so will the tax take, because the personal allowance will remain at £12,570. Assuming the government honours its manifesto commitment to maintain the state pension triple lock, fiscal drag will make the state pension taxable within a few years. This is how it could happen. From April 2025, the state pension will be £11,975 a year. Assuming the minimum increase of 2.5%, from 26 it will be £12,274. From April 2027, it will be £12,581, which is more than the personal tax allowance. This would have happened under the Conservatives, and for the first time in history, the state pension will be taxed if the personal tax allowance is not increased. We know Rachel Reeves is not going to do that. Assuming the Labour government lasts that long, from April 2028 and on the above assumptions, the state pension will be £12,896. From April 2029, it'll be £13,218. With the tax allowance remaining frozen, that creates a tax liability of £130. But it gets worse, much worse. HMRC does not operate PAYE on the state pension. That means either HMRC will have to make a tax assessment on all 10 million pensioners, or every pensioner will have to make a tax return. The latter is probably the way HMRC will go, as it puts the onus on the taxpayer. So every pensioner will have to register online with HMRC for self-assessment tax returns, and then make the return online and pay the tax by 31st of January in the year following the end of the relevant tax year. Are you with me? Are you still with me? So, for 2028-2029, the online self-assessment tax return and payment of tax must be made by 31st January 2030. Failure to do so incurs a penalty charge, which is currently £100. It is still possible to file a paper self-assessment. To do this, the pensioner will have to download the SA100 tax return form or call HMRC and ask for the tax return form to be sent to them. Well, good luck to you trying to get through to HMRC on the phone. A paper self-assessment tax return must be filed and the tax paid by 31st October. Otherwise, there's a late filing and payment penalty of £100. So after 27-28, the government will be giving to pensioners with one hand and taking from them with the other. This government really does hate pensioners. Let me know what you think in the comments below.